Hi, everyone, and welcome to the midweek market update from Smack the Markets for the 11th of September 2019. So, this week we still have the continuation of the major news stories in the background. We have the UK Parliament has gone into prorogation at the moment, so it's paused for 5 weeks, but that hasn't stopped the speculation on what route the government might take or what route they may be forced to take. Um, Also, on the other side of the Atlantic, we still have China and the US, that trade negotiations going on. A little bit more positive news yesterday. We had China coming out and saying that they will be maybe making some concessions and maybe buying some more US products. Now, yesterday evening in the UK time, we also had the resignation of John Bolton, Donald Trump's advisor, security advisor, and that's caused quite a stir in media circles. So the press are really getting their teeth into that. Um, if we take a look at some of the markets we looked at last Monday, and some other ones that are of interest right now. So the mini Dow here, the US stock index, we have, we know on Monday that we talked about, 27,000 being the next target on this. So it's almost getting there. It didn't quite get there yet, but it's just within 28 points of it at this stage. But if we look at the overall picture here, everything, the bias is definitely long, the trends are long, and it didn't do an awful lot Monday and Tuesday, just kind of grinded sideways into these buy zones on these mid time frames. But then yesterday evening and on the rally on the close yesterday evening and the overnight session, we did break out of this consolidation area, did break out of that 26,900 level, and firmly targeting that 27,000 area now. So opening up the 4-hour chart here, we can see exactly what's going on. So very much respecting these levels here, and you can see where we're going after that. Coming down a little bit lower, we can see exactly the kind of action that caused this breakout yesterday. So at the beginning of the cash session yesterday, it did take a bit of a downtick, came down to that pivot very close to that 26,700 area, and then we got a bit of a rally, got some good news about China and those concessions, and it's basically been in an uptrend ever since. Now, it did take a bit of a downtick there when John Bolton resigned, but other than that, this trend on the 60-minute chart is fully intact, as it is on the 30-minute and 60-minute. So we'll be looking for long opportunities above that, and as it gets close to that 27,000 area, we can see the next areas after that. The all-time highs, the current all-time highs, they're just shy of 27,400 is the next target area after that, and after that, obviously, brand new all-time highs. If we turn to a commodity, and our favorite commodity at the moment is silver, and it's fairly obvious why it is silver, because of this daily chart and the beautiful trend it is in, and also how respectful it is of that buy zone. And each time it comes into the buy zone and gets close to that 20-period moving average, it fires off basically. Now, yesterday we got that, we're at that $18 level, very significant level on the weekly chart. But it printed a nice bullish candle yesterday, rejected that $18 level, and already today we've broken out of that candle. So we're looking for opportunities long, hopefully targeting the highs there around that 1960 area. So coming down a little bit lower, we can see here on the 4-hour chart, first of all, we're getting this kind of a rollover type fashion thing here. We're getting uptick on the indicators confirming the rollover, and we're also getting this kind of a trend formed here on the 60, 30, and even on the 15 now, and moving averages just getting into formation on that. So plenty of room there to get an opportunity on that as it heads to that 1960 area. One of the better forex markets we're looking at the moment is the Aussie versus the Caddy, and this is kind of, the Aussie has been on a bit of a good run in the last couple of weeks, but this has been a little bit of a lagger, and the reason it's a bit of a lagger is because that level that's been very resistant to it and keeping price below it for the last, almost a month now. But if we open up the weekly, first of all, and we can see that this big level of just around the 91 level, 91 area, and you can see how significant it is there. So pulling back in there, that would be a nice area for it to roll over if it does roll over. But at this point, we're looking for long opportunities at this, and there's quite a bit of room there up to that level. Looking at the daily chart here, you can see that there's quite a bit of the indicators are beginning to converge now to the top side, and price compressing up there, lower highs, and everything looking like that this may break here on that precise level. And then we have the run up to that 91 level after that. 4-hour chart confirming this as well, very precise. Coming down to the 60-minute chart here, you can see, and if we just pull this down, we can see kind of the distance on the lower time frame, what's left in this. So there's quite a bit of distance on the lower time frames here to get up there, and there is a few pivots here on the lower side of this range here as well. So maybe we'd get something along those lines on the way up there. But at this stage, we're going to have to wait for the break and see if we can get maybe a trend formed at that point. So that's just about it for the moment. We'll be back Monday and let's see how these things are progressing. For the remainder of the week now, the big news item left is the ECB interest rate decision tomorrow and the press conference afterwards. So that's a lot of eyes on that. So we'll be back Monday and we'll speak to you then.